Good morning. Welcome to the Block Thrasher Morning Brew. You ready to steam up some cryptocurrency news? Let's get started here. It is Thursday, 6:57 a.m., and it is a beautiful day. It's another great day for crypto. Let's take a look at the cryptocurrency market. What is happening? Total global crypto market cap is $1.35 trillion. That's a 1.9% increase in the last 24 hours. Bitcoin dominance is 44.5%. Ethereum is at 17.1%. And gas prices for Ethereum are cheap, coming in at 16 GWAY. Bitcoin is at $32,016 after having dropped below $30,000 to 29 something 2 days ago. And what we're now sort of calling the July crash. Still down negative 2.3% on the week, but having a nice 1.9% gain in the last 24 hours. Ethereum, $1,989 as it plays with $2,000 once again, up 4.2% in the last 24 hours. Ethereum looking good. Binance, $293.42, up 2.3%. Cardano, $1.17, up 1 cent. XRP, 57 cents, up 3.5%. Dogecoin, slipping into the red. It's at 19 cents. Polkadot, $12.43. Uniswap, up 2.8% to $16.41. Bitcoin Cash, $432.54. Moving on to the news items of the day. Singapore offers a crypto safe haven. In turbulent times, this crypto-friendly city-state is home to the founders of Ethereum, Binance, and NFT collector Metacoven. For how long? It's easy to see why crypto luminaries, including Ethereum co-founder Vitalik Buterin, Binance founder Changpeng Zhao, and Metacoven, owner of the world's most expensive NFT, have made Singapore their base. The city-state has a lot going for it. On the surface, it's a calm, futuristic fantasy of a place, characterized by the colorful, otherworldly feel of the Marina Bay Sands Resort. Venture closer and Singapore proves to be full of technological wizardry. It's a sensor city with smart initiatives to promote better living, health, and mobility. Omelet-making robots, smart homes, and fintech. Innovation galore, all underpinned by a highly educated, service-focused populace and a government that fronts the worldwide drive towards digitization. KPMG, one of the big four consultancies this week, gave Singapore the top spot in its global ranking of tech hubs outside Silicon Valley. So if you're looking for somewhere to go, maybe Singapore should be on the top of your list. I've been to Singapore twice, and it is a beautiful, beautiful place. It's a beautiful city. I would love to go back again. But more importantly, Singapore has taken a comparatively neutral approach to crypto, acknowledging its potential benefits and encouraging innovation and experimentation in this space. Goldman Sachs says that rich clients are turning to crypto. Over half of the family offices that the bank does business with want to invest in cryptocurrencies or already have invested in cryptocurrencies. Why? Check this out. According to Bloomberg News, Goldman Sachs surveyed its associated family offices and found that 15% of firms had already invested in digital assets, with a further 45% stating that they were interested in exploring cryptocurrency investments. Goldman Sachs included responses from over 150 clients worldwide. Of the offices the bank does business with, 22% managed assets totaling $5 billion or more, and 45% oversaw assets between $1 billion and $4.9 billion. For those interested in diversifying with cryptocurrencies, higher inflation, prolonged low rates, and other macroeconomic developments were the main reasons stated. These are smart people. They're concerned about higher inflation, prolonged low rates, and other macroeconomic developments. Other investment banks are also bullish on long-term prospects of cryptocurrencies. An analyst at JP Morgan stated in April that increased institutional investment could see Bitcoin hit the bank's price target of $130,000. Be in good company. Bloomberg reports the ultra-rich are turning to crypto after driving the SPAC boom. It was a Goldman Sachs survey that found that nearly half the family offices were investing in cryptocurrency. Hester Pierce is in the news again. SEC commissioner has had it with Bitcoin ETF obstructionist, she says. Security and Exchange Commissioner SEC Hester Pierce voiced continued support for the regulator to approve a Bitcoin exchange-traded fund during an appearance at an online conference. While many commissioners are suspicious of the cryptocurrency market, Pierce has earned herself the title Crypto Mom due to her belief that the U.S. is long past due approving an ETF. In particular, she won plaudits from the community for her strongly worded dissents to the rejected Bitcoin ETF applications. This year, she also introduced a safe haven proposal. This is interesting. Initially made in 2020, that would grant crypto startups a 3-year grace period to become decentralized and meet the other criteria before they would be fully subjected to U.S. security laws as a way to drive innovation forward. Now that sounds like a good idea. Okay, let's wrap things up today by talking about how to hedge, how to learn to protect your wealth. This coming from Kraken Intelligence. To protect against inflation-driven loss of purchasing power, investors look to own assets that appreciate with inflation. These assets include gold, stocks, real estate, and more recently, Bitcoin. I would say recently, cryptocurrency. Assets purchased to protect wealth against rising inflation are referred to as inflation hedges and have been part of many individuals' portfolios for many reasons. All right, let's talk about these different assets really quickly. Gold. Gold has a rich history of price stability and a proven track record of resilience during economic downturns. Additionally, gold has been praised for its sound monetary properties, including its scarcity, cost of production, difficulty to inflate supply, durability, divisibility, and fungibility, making it an attractive store of value and a, quote, safe haven asset. For example, the bullion outperformed virtually all other assets when inflation was high under the Carter and Nixon administrations. Pundits contend that Richard Nixon, the 37th U.S. president from 1969 to 1974, nearly destroyed the U.S. economy via his poor attempts to remedy mild inflation with wage and price controls, as well as removing the U.S. gold standard. By the end of his tenure, inflation hit double digits, and gold was up 350% since the start of his first term. Under Jimmy Carter, the 39th U.S. president, 1977 to 1981, inflation got as high as roughly 18% following the naming of Paul Volcker as chairman of the Federal Reserve Board. Volcker attempted to end double-digit inflation by raising the federal funds rate to unprecedented levels. This extensive period of extremely high interest rates is now known as the Volcker shock and was the primary driver of the 1981 recession. Between Carter's inauguration and the end of his tenure, gold prices rose 148% as people flocked to the safe haven asset to protect their wealth. Between major economic downturns, gold prices have historically trended lower before consolidating and then rallying higher as the next economic downturn begins to surface. Figure 16 describes how gold rapidly appreciates ahead of significant downturns before retracing lower and consolidating. There's a chart here for those who cannot see it. You can see this occurring. where gold accelerates, you have this financial crisis, it drops, and then it takes off again. Bitcoin. Bitcoin is often referred to as digital gold because its underlying computer code ensures many of the same properties of gold. Like gold, Bitcoin is also highly scarce, supply inflation resistant, divisible, durable, and highly fungible. Bitcoin is hailed as an inflation hedge because it isn't subject to the uncertainty of a central bank's monetary policy. Instead, Bitcoin creator Satoshi Nakamoto determined the crypto asset's supply inflation schedule at the time of inception, and any changes to it would have to be voted in by the community rather than a centralized authority. Moreover, it seems that the, quote, smart money is buying up Bitcoin in troves since late last year, including legendary investor Paul Tudor Jones, MicroStrategy's Michael Saylor, and Tesla's Elon Musk. Speaking of, I didn't mention about it in the news today, but Musk has flip-flopped on the whole accepting Bitcoin for a Tesla thing, and now is saying that it's likely that they are going to accept Tesla again. I'm telling you. And also in the news was he finally stated on I think he was doing something with Jack Dorsey, and finally said that he owns Bitcoin, Ethereum, and Dogecoin. You know, it seems like there should be some kind of regulation against that. Somebody of his notoriety owning an asset like Dogecoin and doing so much to pump it. Anyway, side note. These billionaires, among others, have added billions of dollars worth of Bitcoin to their company's treasury reserves and personal investment portfolios to hedge against impending inflation. Institutions and renowned investors have historically stayed away from investing in Bitcoin, citing claims that it is a risky and speculative asset. Though before the COVID-19 pandemic, Bitcoin was too inexperienced to be an inflation hedge, its rapidly growing reputation, as evidenced by, quote, smart money buying into the asset, will likely solidify its spot as one of the best inflation hedges for the foreseeable future. And then you have stocks. Stonks. The relationship between inflation and equity prices is not uniform because stocks and the companies issuing them differ. While every stock should be evaluated on its own merits, many contend that value stocks, shares trading at a lower valuation relative to the company's fundamentals, such as dividends, earnings, or sales, may do better than growth stocks, stocks that are expected to outperform the market when inflation is high. This theory stems from investors assessing growth stocks based on their present value of future earnings. When growth in inflation or interest rates starts pacing faster than expected, it reduces the current value of future cash flows. Stocks that can defend high dividend payments, including many value stocks, are likely to outperform because their yield is relatively attractive. Stocks can appreciate with inflation because it can stimulate job growth. Investors may seek to hedge by converting cash into stocks, and revenues increase with inflation following an adjustment period. Assuming high inflation is considered a rate greater than the average for post-gold-linked currency exchanges in the U.S. since 1971. Stocks have, on average, fared significantly better than bonds during times of high inflation throughout history. Out of these 20 years of high inflation, bonds have yielded a positive return for only 6 years, 30%, while stocks finished higher for 11, 55%. However, one should note that the average return for stocks, which is 2.5%, was still less than the average inflation rate, 6.4%, during those 20 years. Although stocks are typically a better inflation hedge than bonds and fiat currency, they have struggled to completely protect one's wealth from inflation in the past. Inflation can also adversely affect stock prices because declining consumer spending during general economic slowdowns leads to lower revenue and profits that weigh on share prices. Also, increases in input costs push inflation, can decrease profit rates and force businesses to falter, as it takes companies several quarters to pass along input costs to consumers. What about real estate? Let's pick up with real estate tomorrow, as we will continue our discussion on inflation hedges, which is something super important and crucial at this point in time. Yeah, we'll wrap things up there today. Hope you have a great day, friends. Look forward to talking with you tomorrow. Press on now. Remember, it's always a great day to earn and stack more crypto.